Hi, this is TJ with netpicks.com and the Counterpunch Trader. I thought I would walk through today's Dow eMini session. Had a tricky decision to make early on, and I just want to kind of walk you through it. There's a long trade here, and it looks pretty good. Now we're using the trend following mode. There's two different modes with Counterpunch, and the trend following mode, it's pretty easy. When the line is blue, you can take long trades, and when the line is red, you can take short trades. Okay, and this is the new calculator. Got some other filters built in, and you'll see some setups are grayed out when it's against the filters being used. So even though this isn't our trade session, you can see right here the short trade is grayed out, so you ignore it. If you were in this trade, you would stay with the green one, which worked out pretty nicely, as you can see. All right, so there's a few other gray ones. This one here, there's nothing wrong with this trade, and the line was blue by the time the bar closed. You could have taken it. It doesn't turn red until after that bar closes. So you can get long here. The thing is that it's 2 minutes, less than 2 minutes in front of our start time. So we're waiting for the 8:30 bell, which is Chicago time, 9:30 Eastern, when the market's open. And then they do open, and it comes back down, and it hits the entry, but now our trend indicator has turned red. And so you can make an argument, okay, you can get in sync with that trade because it already triggered in, and I think that's a good argument. You could do that. But the way I've been doing it is I've been avoiding them. You know, if the trend changes direction, I'll just sit and wait for another setup. And in this case, if you would have gotten in on that, it would have worked out great because it went up to target 1. You would have got to risk-free. You could see the calculator assumed that that trade was valid, and it pushed the stop up. You could see it starting to lock in some profit, and then it stopped out. So you could have taken profit at target 1 and then a partial on any other positions. Right, so you could trade at target 1, target 2, target 3, and even trail. So assuming that that trade then we just let it go, you could take this next trade, this green trade. But you're not going to take it exactly at the entry, because when you look over to the left, the entry's at 88. You have this swing high and high of the day exactly at 88. So you're going to put at least a 1-tick adjustment on the entry, make it push up to 89, which it couldn't do. It went down and then went even lower. All right, and so then there's a new setup. And once there's a new setup, I just go with the new setup. Keep it really easy, because otherwise you're really confused. You know, you never know. Do you go for the new one? Do you go for the old one? Which one do you take? So for me, I just keep it real simple. I go for the new one. The new setup cancels the old setup. Never triggered in. Never got over that high of the day. So that's the trade right there. And that one pushes through, and it goes up, and it actually hits the first target. Right? So that's good for 13 points. And the stop moves up, and then it comes down and stops out. So you only get 13 points to target 1 and 1 point to target 2. So the goals that I use for quitting for the session is that if it could hit 2 target 1s on 2 separate trades and be positive, have a positive result, or 1 target 2. If it misses by 1 tick, that counts. Okay? So right now we're halfway there. We got 1 target, 1 trade. Okay? And then we have a gray trade, but again, it's blued out. I mean, it's grayed out because it's going against some of the new filters built in the calculator, and it avoids what would have been a losing trade. And instead, we get long. So these filters work pretty nicely. As you can see, we've kind of avoided a losing trade right there. Now we get long, and it pushes through, makes new highs for the day, hits target 1, comes up, hits target 2. So our goals are met. This will be the last trade of the day. As most of you know, we call that the power of quitting. And one of the things we realized a long time ago, and we incorporate that in our trading, every decision we make, is that the money is made from the results of the trade plan. And the trade plan consists of the trades we take each day, how we trade them, how we manage them once we're in them, when we start, when we stop, all those things. That's the trade plan. And if you can consistently execute your trade plan day in and day out, and it's a proven plan, you can consistently grow equity and make money. And so we stick to that. We're very strict at sticking to our discipline. All right, so this is the last trade of the day. It's a second trade. It's another winner. It's just a matter of how much. And that's about as far as it can go. But that's still a great trade. Target 1, target 2, trailing. You got a partial profit. And if you add up target 1, target 2, target 3, in the first trade, target 1 got you 13 ticks. The other two targets only got you 1 tick. All right? But then the second trade, target 1 got you 17 ticks, target 2 got you 28, and then the trailer got you 13. Or target 3. If you're coming off, you'd come off at target 3 with your trailer. So all in all, 3 positions ends up being a 73-point day for the Dow eMini. And that's a wrap. So that's how you handle it. Looks pretty choppy. You see a lot of dots. You might think, oh my God, I'm getting a headache. It's so confusing. But you know what? When you're at the right edge of the chart, the dots are guiding our hand. They're showing us what to do. The dots, the lines, it all fits together into a very robust and solid approach that continues to produce. This is a great strategy. And you get used to looking at it. You don't have to show these dots here. These are the exhaustion dots. They show you when the market is at exhaustion points. And you can turn those off. I like to see them because they also, a quick visual cue. You can kind of see what's going on as it's making higher highs and higher highs and higher lows. And it helps, for me anyway, my eyes are trained on it and I kind of know how to interpret it. And you learn it with training, but you do have the ability to turn off. You don't have to have all these marks on the chart. You can definitely simplify things. All right, so anyway, I hope you enjoyed this video. This is TJ with the Counterpunch Trader. Everyone have a great weekend, and I'll see you on the next one.